Hi, Robert Morrow here from emailhomes.ca and Hamilton Home Review. Video number 5 in our first time home buyers series discusses pre-approval. This is the next step. We have figured out how much we can spend, at least in our minds. We've had a look around on the MLS and saw that some of the houses we want are within that range. We now understand how much money we need for deposit, down payment, and closing costs. We're ready to move to the next step. Well, the next step is to get a lender to agree with us that you can afford this house. So you trot off to the banks, and the first bank, you're not really sure you like the terms and the interest rate, whatever, so you go to the second one, and the third one, the fourth, and you're checking them all out, comparing them. Problem with that is every time you go to a bank, they do a credit check, and that's a hit on your credit rating. By the time you get to the fourth or fifth bank, they're now asking, well, what's wrong with your credit? There's so many people checking. Silly, I know, but that's how it works. So my suggestion is to go to a mortgage broker. They are set up to take your information once, and then they will shop around on your behalf to all the lenders, including all the banks, but also second-tier banks and private lenders. And they will come up with the best rate and the best terms for you based on what you two have discussed. Now, if at some point the mortgage broker says to you, look, if you do this, this, and this, you might be able to get a higher mortgage if that's what's necessary. Some of the things they might bring up are like bring your credit card debt down to below 30%, save up a little bit more down payment or whatever. But their job is to just make you look most attractive to a lender. Then what that lender does is gives a piece of paper that says, hey, if you buy this house in the next 3 months, we will give you a mortgage, which is great. We can go off shopping. Now, don't panic. Some people panic when they say, well, 3 months, that's not much time. It's not really that critical. What the lender has actually said is based on the information today, we're willing to give you a mortgage within the next 3 months as long as the house you pick is worth what you say it is, and that's our job. And everything else hasn't changed. You haven't got more debt or whatever. If you've qualified for it now, then the odds are 3 months from now you're going to qualify again and you get it done again. It's not a big deal. You may not need a pre-qualification. You just go straight in for the mortgage if it takes 4 or 5 months to do. In fact, sometimes you might be in a better position because you saved more money or you brought your debt load down, whatever. Lots of it. But the deal is we need that piece of paper to say that, okay, we can go shopping because the bank agrees with us that you can afford that much. All right?